It's an NDTV Profit exclusive now, a major setback for Hinduja Global Solutions in an alleged tax avoidance case. Hinduja Global NXT Digital in 2022 merger ruled an impermissible avoidance, essentially. In fact, the tax department has been directed to recompute income and recover the full tax. Shimi, my colleague, is now joining us, who's getting us all these details as well. Shimi, over to you.
Yeah, so this is a major blow to Hinduja Global Solutions, which is an arm of Hinduja Group. The approving panel has ruled that the company merger with NXT Digital, somewhere happened in 2022, had actually, was an impermissible avoidance arrangement under, GAAR, which is India's General Anti-Avoidance Rules. Now, the panel has disallowed around 1,200 crore in tax set-off claimed by Hinduja Global and directed the assessing officers to recover the full amount of tax. Now, the order which the NDTV Profit has seen has concluded that the primary purpose of this merger was to obtain a tax benefit and not to achieve any kind of genuine commercial or operational growth. And in fact, if you recall, the Hinduja Global has sold its healthcare division, somewhere in 2022 with NXT Digital and sold a profitable unit, made huge gains then, and merged with that a loss-making related company. And now what the panel is kind of saying in its final order that this is a kind of corporate arrangement which Hinduja has gone into to misuse the entire tax benefit, and transaction lacked any kind of commercial substance. And in fact, it also cited the evidence from searches and executive statements showing internal decision and discussion about tax saving and confirming that no real business actually existed between these two entities. In fact, they are also kind of clearly says that the tax burden was approximately 281 crore. Out of that, 8,000 crore of merger happened because the total capital gains out of that is 3,000 crore. So with all that computation, in a nutshell, the order stated that essentially the Hinduja Global sold a profitable unit, made huge gains, and then merged with a loss-making related company, mainly to wipe out its tax bill. And in fact, they are saying to now kind of pay up the full amount on the capital gains which they made. So, but do remember that company has the option to challenge the move in the High Court because this is a panel which has come out with the order on its in its October 30th order copy. Yeah.
Well, thanks so much for that, Shimi. Summing up very well as well. But Mr. Chokalingam, do you have a quick view on something like a Hinduja Global?
I would avoid, particularly after this news, because last 4 years from FY22, there has not been much growth in profit or revenues, and poor single-digit margin. So this would be a big setback, I believe. So I would avoid the stock.